Hello everyone, welcome to the PivotBoss Monthly Market Outlook. It is the monthly market outlook for February 2021. Welcome to the PivotBoss Premium Trading Room. My name is Frank Ochoa, also known as PivotBoss. I'm also author of the book Secrets of a Pivot Boss. Thank you all very much for joining me here today. Looking forward to today's session here. We got several good charts here to look at today, both from a higher time frame, longer time frame perspective, but also some swing ideas. And I'll also be taking any requests you have as well. So if you have any ticker names you want me to take a look at, please drop them into the chat box, or in the chat box in Zoom, or also in the trading room. So without further ado, we're going to go ahead and get started here. We have a pretty full slate. I'm going to start with crude oil. We're going to look at a higher time frame view of crude, but first, quantifying the recent 15-day range here suggests major expansion ahead. For those of you that follow me on YouTube and watch the pre-market videos, you know that this is something we've been talking about for several days. Anytime we start going sideways for longer than 3, 4, 5 days, you know I start to quantify this range with our PivotBoss Advanced ADR indicator. This indicator basically measures price range, current price range against what the historical price ranges are for a given period of time. And from there you can quantify the range and also then project potential expansion potential based on the energy that range has developed. So right here you can see that crude got very sideways here over the last 15 days of trading, but yesterday was Monday, the first trading day of the month, and we saw a bullish outside bar develop right here, a very strong failed new low that developed into a bullish outside bar. You got the buy signal that developed right there, and that was the earliest indication that we may have found the breakout point here ahead. Because from this move we see that today was a very bullish day. At least the overnight trade was very bullish. Most of the RTH session was mostly sideways, but it did finish very strong and actually finished above 55s for the first time in a very long time. So if you look back here, the 55 level right here, where we currently are, if you take it all the way back, that takes you all the way back to right here early on in the COVID selling spree there, where price broke below 55s. And that was all she wrote. Big time push downward. It came back to 55 to make a lower high. And then that's where we ended up dropping to -40 at some point on that front contract. We've since bounced from those lows tremendously. It's taken a while. But once we bounce from that low, we kind of snap back very quickly to 40. From 40, mostly sideways. And here, ever since that bullish outside bar, you see that one right there? That was the first trading day of November. When that developed at that time, we mentioned that there could be a good reversal back up toward the highs, but it was really this breakout, right, that really opened up that expansion phase after months and months of sideways. That expansion phase continues to this day. We are on the highest highs that we've seen for the year and over the last year, and we are still continuing higher toward higher targets. So I wanted to talk about this one from a swing perspective, and then give you a bird's eye view as well of where we might be headed. In terms of the breakout from a 15-day range here, we can quantify down here that we may have about $6 of range, 6.38 points of potential range up ahead at the very least. And that is basically looking at 125% of current range right now. So that's usually an expansion market. We go from compression, which is below 65% of average range, and then we go to expansion and increase the range. So right now we're on the cycle here where the volatility may start to kick up, and we may rally somewhere or move in terms of distance somewhere between 6 and 8 points. For the most part, this market has been able to move about 8 handles of range anytime it gets into that 15-point compression, you see, boom, 8 handles of range. Over here is a 15-day compression, boom, another 8 handles of range. Not quite compressed here, almost there, and then bang, another expansion phase. So here we are again, looking like we could have a pretty solid expansion phase ahead that could take us again between 6 and 8 handles above. So from the low, call it 52. If you rally 6 handles, that's 58. You go 8 handles, it's 60. And that's the upside target we're looking for out of this move, if price can continue to stay above 53.5 or 54s, right? That breakout point. If we can continue to see crude oil remain above that 54 on a closing basis, we may have a very nice continuation toward the 58 to 60 zone above. The next LVN above will be right here at 60. So we have some really good short-term directional conviction here ahead. And if you want to see what that might look like, you don't have to look too much farther than how price broke out to begin the year. Here we also had a 12 or 15-day compression, and it looked like we might break down. It gave us a bearish outside signal here. The very next day it broke that signal and exploded to the upside. It's this phase right here that we might see up ahead over here to the right. That phase where every morning is a pullback buying opportunity for a continuation higher into the afternoon as price approaches that 58 to 60 zone. So we're looking for 58 to 60 on a swing basis over the next 1 to 2 weeks for crude oil. Now, if we back out and we take a look here at the weekly time frame, this is something we've talked about in our trading room. We have just broken back above the 50 level here. 50 is very important. If you look at, actually, let's do it a little bit higher there, right there. So that's a really good market structure zone right there. You also have above 65 into about 75 as the next highest above that. So that's your market structure level here. The first week of the month here, January, the first week of the year, we saw a very big breakout back above that $50 level. That $50 level also represented market structure support from that prior price structure. So prior to the COVID sell-off, we were happily trading for an entire year between 50 and 65. And then once COVID started to permeate here, you saw crude sell. Again, once it gave up 55s, that was all she wrote until this thing really dropped tremendously. Again, that one contract on the front month went to negative 40 that one time. Unheard of. But again, that really rings true that anything can happen in the market. So you have to mind the risk. That 65 level right there is very, very important because it's the top end of this range up here. So if you're breaking back above market structure support at 50, the idea is that you are headed to the top of that market structure range there at 65. And then theoretically speaking, it can come all the way back to 50 and continue to trade in here for a while as it did before. So right now, not only do we have a short-term likely continuation toward 58 to 60, but over time we may have a move that takes us as high as 65, which doesn't seem that far away. It's 10 handles away today, 55 close, 65 here, 10 handles. Again, if we do go about 6 to 8 handles, we're going to be very, very close to reaching that zone here pretty soon. But again, this market breaking out from a 3-week narrow range after breaking above 50, it looks the part for further expansion to the upside. I would say also, even if price were to pull back from 55 and we see some sort of significant 5-handle drop into 50, that could still offer a buying opportunity for a continuation higher. So if you want to look at a template for something like this, go back to the previous market structure here where price dropped below that market structure, $50 level. Here's the week where it broke back above. And then you can see right here, this is kind of some compression here. We have a couple of pullbacks, and then it takes off to the upper end of the range. So this is very similar to what we're seeing over here right now. Again, from a higher time frame perspective, we're looking for a move towards 65 as long as price can continue to hold above the $50 level. So crude oil remaining very, very bullish on a short-term perspective and on a longer-term perspective after rallying tremendously here from last year's lows, building up some energy and continuing higher still. That November turnaround was tremendous because it brought prices from below 35 all the way back to 55, and we may still have more to go here towards 65 up ahead. So crude oil looking good from both a shorter term perspective and higher time frame. That's a very good question right here from David. Should we wait for the pullback or get in on that swing CL soon here? If you look down here, usually on a breakout like this, you have your trend structure here. What ideally, if this swing is going to continue to play out, ideally any pullback into 54s could be defended for a continuation higher or into that midpoint. So somewhere between 54, 54.30 could be an entry point for a continuation up. Sometimes you don't get a move that deep, but sometimes you can get a move that can perhaps take out this low and drop and then have a failed low and go. So I do think that there's still perhaps a pullback entry opportunity that can be seen. What I mentioned in our trading room today is you likely don't want price closing below 54 if this thing's going to continue higher in the near term. But any pullback into that zone could provide a trap with a continuation higher. So usually, you know, if you look over here, this was kind of the breakout or initial breakout. The next day it pulled back a little bit and then it continued higher. Over here, I'm looking at something like this right here where you have that big day up. The next day you might pull back pretty deep here, and that could provide an entry for a continuation. So that's the idea. There's also this idea here. So when we had that compression over here, we had the breakout day. This is your digestive or absorption day, and then here's your failed new low where it kind of got a low pull back and then continued higher. So any one of those scenarios could play out here up ahead. But I do think that any morning weakness the next morning could offer an opportunity to buy the dip and look for this thing to continue higher. I would say, though, if this thing can't close above 54 or especially 53.50 on a daily closing basis, you might want to be careful there, because at that point we might be looking at some sort of blow off top or higher high failure type of scenario. But even then, remember that 50 level is still super important. We could still drop deep here, and then that could be a higher time frame buy. So this is more of a higher time frame buy at 50. I think the swing buy can take you as deep as 53.50 or 54 and then continue higher. So that's the thoughts right there for the swing idea. Absolutely, Giorgio. We'll take a look at those two when we get to the stocks. Absolutely. So that's the idea for crude. Really, really good move so far out of this narrow range. And like we said last time to begin the year, when you have compression like that, there's a tendency to see that release of energy over the coming 1 to 2 weeks. We definitely saw that to begin the year. Now it looks like we're kind of rinsing and repeating as this thing continues higher. MB's asking, what instrument do you use for this? So I trade the actual futures contract. There is also, you know, various ETFs. ETFs, I'm not usually a fan as much of the energy ETFs. Something like a USO, for example. But this is another potential instrument that you can use if you don't like to trade or don't have the experience to trade futures. This is one right here that you could use, USO. You can see the compression right here. There it is quantified, and then it looks like a 3.6 point move could be ahead, somewhere between 3 and 4 points of range, and we're starting to see that move materialize. So this is another potential instrument that you can use for that idea. All right, let's take a look at the next one here. I wanted to continue, you know, almost like a running story here, continue to watch the YM on that weekly time frame. It's such a big higher time frame pattern here, that expanding range. It always looks like it just no way that it can happen, and then it does. You know, and I'm talking about this range right here, that expanding range, right? Just huge expanding range, and When we initially talked about it back here, you know, this was a huge move when it happened at the time. When we talked about the potential of this one happening, it almost seemed like it was not. It just was too far out there. And then Q4 hit, and it was a tremendously bearish Q4. December was the most bearish December, I believe, on record. And then we got that expanding range. And then we work our way all the way up here. And then you look and you're like, you know what? There's almost no way now that we will come down here and grab that low. But then COVID hits, and you see what happened. And now you look up here and you think, you know what? There's almost no way we come down here and hit a new low. And then you never know what happens. Again, as we saw with crude going to negative 40, anything can happen in the market at any time. As you see with GameStop going from $6 to $400, $500, and then back below 100 today, anything can happen. So I want to keep this one on the forefront of our minds. Not saying that this will happen right away. Sometimes these things take time to build out. Sometimes they don't. I would say we have the market structure to watch, and that's what's most important. And that's basically this high to these lows, and it comes back to about 29.5. You know, that 29.5 is going to be very important. So that recent pullback we saw to begin the month today, or this week, already saw a bounce off that area. You know, we may build out up here, but if we start to give up 29.5, first things first, you know, you likely pop back or drop back toward key range support, which would be 26, right? HVN there, that makes some sense. Maybe it rotates a little bit lower to 23s. That would be the 100% target on the downside and the bottom edge of this D-shaped. But if it can't hold 23s, you know, that's where things really come into play. I would say, you know, if there was a market where we would drop of that magnitude, it may be a market like we're seeing now where everything is shooting up to the moon. You know, when you have stocks that were $10, $20, $30, $40 last March and they're now trading $3, $4, $5, $600 now, that's just unprecedented. And in those bubbly type of markets, things can certainly happen. So that is something to consider. Again, I think it's just important to continue to just have this on the forefront, just to continue to watch it, because when the wheels do get into motion or set into motion, it doesn't take long to make that trip. Last time it took 1, 2, 3, 4 weeks, and it was there. Failed new low below the previous week's low that next Monday, and that was the low. So it doesn't have to take long if the scenario's right. Again, I don't know what would do that, but nobody ever kind of predicts it usually, right? It's always a black swan event of some sort. And we actually, if you go back to last year's recording at this time, we talked about that. We talked about it and said, you know what? We don't know what'll make it happen, but it's a black swan, and here comes COVID out of nowhere, and bang. So just wanted to keep this to the forefront. This expanding range is still developing. 29.5 still important here. I don't know if it'll happen, but you know, again, anything can happen at any time. So if that market structure level gives out, we at least have some downside targets to play to. So I wanted to talk about this one from a higher time frame perspective. If we looked at it on a daily chart, though, you know, I mentioned yesterday in our trading room that it also has qualities here that can be considered like it's starting to top out a little bit. You know, it looks like this is left shoulder, head, and then now starting to build the right shoulder here. If we have a sharp pullback tomorrow, that may definitely start the pattern for some sort of head and shoulder. And now you have the neckline coming in at 29.5. And now in that scenario, head, shoulder, head, you tend to rotate back to the prior pivot low, which would take you right there and right here, and that's value. So I would say, you know, before I start saying 16 or 18K, you got to say 26K would be, you know, a big windfall move if it were to happen. And again, that all kind of starts with 29.5. At the moment, It's looking pretty solid. Very, very good bullish outside bar. Actually, not a bullish outside, like a thrusting rejection yesterday. A very solid continuation today. Did give up a little bit here at the end of the day. But just something to consider here, that expanding range still very much in play. The other one I want to talk about here is Bitcoin. Bitcoin has been tremendous in its strength and volatility, especially since September, and over here back in that time as well. But I think the PayPal news was huge for this one. It was already having some major momentum. Exploded to the upside, hitting 42.7. And there's a couple of things we talked about here before. Number one, we have ourselves a new key range at these highs, which is really good. If you're not familiar with what a key range is, I don't know if anybody says it the way I do. I'm not quite familiar. This is something I usually make up my own terminology where I don't find terminology already. But this is an impulse sell-off that happens, an impulse move. So you have a very, very strong top. Never comes back to that point. It aggressively sells off. It gets a very strong bottom, and then it bounces back to the midpoint of that impulse move. When that series of events happens, and it happens in a very specific, quick way, you get yourself a great key range. And that key range gives us this high, the low, and then that midpoint right there. It also gives us these extensions. That extension is the 50% extension. This extension is the 100% extension. If it were to break to the downside, then you have 50% is there, and then that's your 100% way back here. Okay, it's an equidistant idea here. All of them can be hit. It just depends on how a market goes. Now, when we developed this key range here, which was basically when it happened, we mentioned that the best buying opportunity will be somewhere right here between 28 and 30. So basically anything below 30 could have been a reaction, rejection rather, back to the midpoint, back to the prior high, and then perhaps over time works his way higher all the way up to the 100% target. The 100% target would be 54,488. 54,488. So that could be a tremendous target up ahead. So you could be doubling from 27s all the way up to here, or get very close from where we currently are. So that's a major target. Again, I don't know how soon we may get there, but we know that this market can move very, very quickly when it gets up and goes. So down the road, I think this key range is very much in play. And that 54,488 looks like a significant target that may be hit down the road. Now there's one other thing here, or a couple of things. Based on market structure, you can see down here there's a lot of volume down here, values way down here at 9,200. But up here, it's a little bit thinner like this. We're now starting to get a great D-shaped profile here. Wasn't the case a few weeks ago, but now it is. And what we talked about before is that you have your market structure, basically here. You got one that goes up, maybe somewhere in here, here, here. At some point, we may need to come back and retrade through this market structure. Retrade a little bit through here. So, when a market is very volatile in this manner, it can be volatile to the upside and the downside. Doesn't necessarily mean it has to keep going up. It can flush, it can shake out first. Quite a bit of volatility can happen. So if this were to fail at this market structure support level, if it fails to hold above 30K, for example, or 29K, we could have a quick pullback to 20, and we might trade between 20 and 30. If it fails to hold 20, we might trade between 12 and 20, or 10 and 20. And those are the market structure levels. And then it could perhaps climb its way back up this way, then that way, and keep on going. So I wanted to discuss the key range for Bitcoin, and also the key levels to watch. Again, the one we talked about is if price dips below 30, it could be an opportunity to reject it back up. It's already had a 30 to 39 bounce, or a 29 to 39 bounce, so it's already been 10 grand worth of bounce just in a matter of days. I think it's still kind of building energy in here with great market structure that could lead to more strength down the road. But 54.4, 54.5 could be the ultimate upside target here for Bitcoin on this, based on this current price action. And I would say that if price were to re-auction all the way back through here, somewhere in the 15 to 12K might be a floor for this one, as the 200 starting to come up. You have major LVN support in here, and that market structure could start to play back out up the road here. So this one, really good key range, great levels here to watch, with the potential to continue toward 54s at some point down the road. To piggyback off this one, let's talk about Ethereum here. Ethereum has been tremendous, and it may have just begun another major breakout move. We had Ethereum as a candidate to double back here. We had that great rounded bottom. You can see on this day right there, one of our members in our trading room asked, hey, can you take a look at Ethereum here? And that's when I mentioned this is one of my favorite looking patterns here. A huge rounded bottom accumulation pattern. That rounded bottom had developed below significant support here, and we were on this day right there, right at 70 bucks. I mentioned that likely has a breakout coming toward 140 to 155. It hit that 155 level and exploded to 205. At that point, I believe this thing got a, what was it, a 10 for 1 split, 9 for 1? It was a tremendous split there. But it made that and then some. So it was a double and then some, and then it has pulled back tremendously since then. Now it's built up some energy here around value, which is about 15 bucks, and it's starting to look like another breakout move. It had a bullish extreme reversal yesterday set up. Today, very strong trending day. Very strong trending day. It started with an early shakeout and never looked back. This one appears poised to retrade back toward 25s, and it almost looks like a large cup and handle type of pattern, which is not something I usually reference, but some of the old school traders in here definitely know that pattern. This one here again, rounded bottom, boom, explosive move. Now it's kind of building out here. It looks like it has a shot to maybe make a move back toward that recent high, which is now 30 bucks. And we're trading at 17. So it could be a double again or thereabouts heading into those highs. So again, this one been very good. Fortunate to find it at the right time before, and now we'll see here with more energy being developed, we might have a move to 25 and perhaps up toward 30 in the coming months. So very strong today out of that one. Let's see. I also want to take a look here. Now we're going to go jump onto some stocks right now. Some of the stocks here. We're going to start with Tesla for a moment. Tesla was one we had as a buy candidate last October and November, but November was the breakout month. Again, based on key ranges, here's our great key range that developed. Big impulse rally, a pullback to the mid. That gave us this key range, high, low, and midpoint. And during the November monthly outlook, we talked about these targets, kind of like we just did for Bitcoin. And I said, you know what, by the end of the year, we have a good shot to reach the 100% target at 617 and the 732 target, which is the 100% target by the end of the year. This was the last trading day of the year, and then on the first trading day of 2021, we hit the 100% target. So just a tremendous rally to reach those upside targets. And then we have to add some more to the upside because we haven't had a new key range to give us new targets. So this is the 150% extension at 846, 847, and it remains very, very bullish. So that's tremendous the way that this thing is played out. It's not something, again, that you would normally foresee. Oh, accidentally clicked a wrong symbol here. It's not actually something you would normally foresee, but again, when you have a great impulse move in a key range, it can give you some great targets. And whether the market gets there or not depends on how that market plays out. But this one certainly played out in that manner. I think right now we're looking for a continuation toward the next highest target. That's going to be 961s. So from a short-term perspective here, you can see that the PIMAs remain fully intact, the PIMA trigger zone. So that's this 8-period average here and this 21-period average. That's 34 and 55. These are sloping up, and when they're stacked and sloped this way in a bullish market, you want to look to defend pullbacks below the 8-period and into the 21 for short-term pops out of that level. We got a deep pullback here. We're holding it, and now we're popping back out. Again, this buy the dip looks like it has new highs coming and likely a rally toward 961. At the moment, it may look like we're starting to develop some range at highs, perhaps an expanding range, but that would mean that we got to take out a new high here if that were to be the case. So it appears we have more upside as high as 961 from a short-term perspective. I know it's not wise to short Tesla right now. It tends to burn the shorts. So anytime it pulls back, it tends to be a buying opportunity until it breaks market structure, and this one just hasn't broken market structure, it seems like, in a very, very long time. So very, very bullish here. Holding the 775 is very bullish for a continuation toward 961. Ideally, we get some kind of move like this, some sort of pullback. Doesn't have to be many days. It could be like this one, a 5-day pullback or whatever. If it were to give us some impulse pullback, we may get new key range here, and that could give us much more reliable targets moving forward. So this one looks very, very strong still, and continues to maintain its market structure. Here's Nvidia. Giorgio's asking about this one. This one has been consolidating. Very nice compression here that you see. This one's made quite the comeback. I mean, tremendous. From the 175 low, it comes up here and nearly hits 600. Since then, it has a very similar pullback here as Tesla did. Pullback, and now that's your key range. So we can mark that right now if we wanted to, just to be a little more precise about it. So let's see, the high here, 589.07. Alright, let's see here. We're going to add a fib extension tool. I don't use the fib extension levels, but I do use the tool there. Let's see, the low here is 468.19. That's 468.17. Alright, and then somewhere around 528.60 or so. So somewhere in here. Let me go ahead and fix that now. Over here, so the high again, 589.07. There it is. The low over here, 468.17. So it did snap. Now I gotta do math. 523, 468. $528.62. Okay. 28.62 is the midpoint. That's our key range. So now this key range gives us everything we need to know in terms of potential energy to get to those outside targets, whether it's the upside or the downside. Generally speaking, in a very bullish trending market, if you start to build a range at highs, it's usually a reaccumulation phase that can lead to more strength. So generally speaking, I'd say that this has more potential movement upside. 649.50 and 710 are the next upside targets if it can get through the key range high up here. Now, at times, especially ahead of a bearish market, which I don't know if we're getting there just yet, this can look like distribution. In that case, any violation down here would also coincide with a 200-day, and that could open up, a path to the downside. Again, not sure that would play out that way. We haven't really seen distribution in this market in a long time. So, not expecting it, but it could still happen. This, traditionally speaking, and we're not in the traditional market, traditionally speaking, you get a great markup phase, you can get a distribution phase, and then that leads to a markdown phase, and then perhaps a new markup phase or accumulation in markup, whatever the case is. So this is not traditional times, but this is the key range to watch. We're holding around the midpoint of that area. I would say the best area to buy, if you're not already in, maybe being patient for a test somewhere in the 460 zone, because if it comes down here and rejects the key range low, rejects prices at or below the 200, then it would quickly snap back to value and perhaps start to work its way higher. So this might be the ultimate area to watch for rejection and perhaps look to it to be a buyer if it can get down there. Not sure we do, but just something to consider. So that's Nvidia. Another one here we talk about is Apple. When we talk about key ranges, Apple has one as well. This one, I'm using this strong low to that strong high back to this midpoint. And it's done okay, but it hasn't done as good as I thought it would do. You've gotten this very good breakout and continuation from the midpoint of the area, but every time it's gotten up here near the key range high, it just hasn't been able to stay above that high. Early signs of just weakness, or at least something to be concerned about. But the near-term trend, medium-term trend continues to be intact. It's at a cycle low right now. A cycle low with a buy signal here. That suggests that we could see, at the very least, a rally that could take us back to 145, maybe finally into that 150 target. 150 would be the 25% expansion from this key range edge. So this looks like it has a short-term bounce. We're trading 135 right now. 135 to 115. 150 could be ahead. So it could be about a 15 handle rally ahead. Now, something that was brought up in the room today, very good question a little bit earlier. I believe JD asked a question. Are we starting to see a failed breakout from the range? It tried to get above the key range high and it failed. Boom. That does seem like something to watch out for right there. I would say this level right here would be very important. It's the 137 level, that high. If we start to come in here and start to form a lower high type of scenario, perhaps we may be headed a little bit lower. Right now, signs point to more upside, but keep an eye on this 138 level right there, because if it can't get through there, that might be an indication we might need to pull back a bit deeper, maybe into this lower 25 level, which is 126, maybe as deep as the 113s. Again, this is not normally one you want to bet against either. Been very strong. Keeping an eye on this one for a move to 150. Now there's several of these big stocks right now that are up here in either a reaccumulation or a distributive type of state here. This one looks very similar to that Nvidia we were just looking at. This is Amazon, and you can see Amazon here has that similar key range back here, building a lot of energy for several months, compressing even. Again, in many normal markets, this may be seen as distribution that could lead to weakness, but again, Amazon's not one you tend to want to bet against. I did see that Bezos stepped down will be stepping down as CEO to become the chairman. Will be interesting to see how the market reacts there, if at all. We got wicks in the after hours trade here that take us down to 32.50 and up to 34.75. So, you know, we might see more volatility in here soon. Or we're seeing back and forth chop. We may see more of that, but if it starts to get out of this range, there's a ton of energy here to really make a move back toward 4K. If it can't make a move higher, then we have some downside targets where it can get to. But this 200-day has been rising very, very rapidly. When we got below it last time, that was the time to buy. Perhaps it may need to come down here and trade a bit below it. I say if it got below 3K, that might be a trap opportunity to take this thing higher and see if you can get it to 4K from kind of a investor standpoint, longer term standpoint. So keeping an eye on this one. Very, very tremendous range here. Key range is locked and loaded. We'll see how it continues to play out there. One we had as an accumulation candidate last month was Cronos. Cronos is in the cannabis space. We talked about this one being a good rounded bottom last month, and how it looks like it has the potential to make a double, if not a triple, up ahead. When we talked about it, it was at $8. We mentioned if you can get in at 8 or better, there's a shot to get this thing up to 16. That would double you. And then over time, we may see a continuation back up toward 24 to 25, which would be a triple down the road. This one got a tremendous move to begin the year. It rallied from $7-8, reaching highs into about 12 or nearly 12. It's at 11 and change right now. Again, with this one, it continues to hold above the breakout point of the rounded formation there. So we could theoretically drop all the way back to that breakout point and then continue higher. So there may still be more entry here as price drops into the 925, 950 zone. You may be looking at a double into 18 to 20 just from that fresh perspective. But this has been a nice move so far. That's the weekly chart. If you look at the daily time frame here, this is one we talked about right here last month on, I think it was the second trading day of the year. It was at 750 when we talked about it during the monthly outlook last month, and now it's at 1150 here. So it's been a great month so far. We will see if it has more juice to continue higher. Today was an 11% day, and it looks like some of these stocks in the cannabis space are being bid up right now, including TLRY. Right, TLRY, 22%, 23% gain today. If you look at this one, it looks similar to Cronos. It looks similar, and that right down here, that's your accumulation. You see value was 750, 760. It took value bid to begin the year, and here we are. A little bit of a pullback a week or so ago, and up today by 22%. That's a tremendous move. But if you look at this thing here on a weekly time frame, bring it out a little bit here just so you can see right there. This is classic accumulation, right? Classic accumulation. Major sell-off for this one over time. Got to about $3. Accumulation occurs. Value gets shifted down to $8 on a weekly basis. 7 something on a daily chart basis. And then explodes higher in the first few weeks of the year. Again, this one could theoretically drop back toward $10 and still be an opportunity to keep this thing going higher, as you likely see the top end of that accumulation pattern defended. I think this has a good shot to continue back toward about 35, and that's perhaps by the end of the quarter. Based on quarterly range here, the low of the quarters here, this would be average quarterly range right here, and that would take you to 36 quarter. 29.29 would be the 75% target. So somewhere in here would be the primary or the high probability target zone for quarterly targets there. So right now trading 23.49. Again, any pullback could still be a great continuation up. I would say perhaps anything below 15 could be a great double candidate for this one if we were to see a pullback of that magnitude. So this one looks like it's continuing higher tremendously. Not sure we're ever going to see those 15s or anything, but you can definitely see that accumulation is working out to the upside, and this has a shot to continue higher toward 35 over the next couple of months. We talked about Gilead last time as well. I just wanted to follow up on this one real quickly. We talked about market structure with this one last month. And specifically, we talked about the 61 half level. Let me grab this tool. Here's 61 half. You see the bottom of the market structure. We had it as a long candidate again in the room here on the first trading day of the year, which was here. You can see the lower low rejection right there, and what I mentioned at the time was this lower low right here is also a bullish divergence in the higher time frame. That would at the very least take us back to 61.5 to 62. So we got that move. I think by the end of the day we were sitting at 60, so it wasn't huge there. But we got that move. But I mentioned if we can get above 62, that's what opens the door to 70. And you see that this one popped above 62s. It retested 62 here with a higher low and exploded to about 68 and change. It's now pulling back and still has the potential to rocket up towards 70 here. Again, that's because we're back in this market structure. So if you trade below that market structure and reclaim the bottom of that market structure, you tend to rally back toward the top of that range, just like we talked about with some of the others a little bit earlier. So that's one of these cases here where, again, got back above 62s. We're still working our way towards 70. But keep in mind, once it does or should it hit 70, again, theoretically, it could still drop all the way to 62 and now become, kind of a captive to this range until it's ready to find strength into the next market structure above. So we may still see a return to 62s over time. But this has been a great move, and I wanted to talk more about that concept we discussed a bit before. Market structure, reclaiming that market structure support opens up the path to the next resistance level. So this one's on a good path right now. Another one here that was asked about a little bit earlier was Exon. Let's take a look at Exon here. Exon's had a pretty good bounce here off the lows. From a weekly chart perspective here, if it would give me the rest of the week's data, I guess it doesn't want to. All right, we'll go back down to the daily chart. From a weekly perspective, though, this rejection down here was really solid. Coming deep, not quite taking out the low, but coming deep down here after that big pump right there. It's been able to bounce back from that zone here. It's been able to reestablish acceptance above the 200-day, which even prior to COVID was already sloping down for 7 months, 8 months prior to COVID. So it had already been below the 200. 200 was already being offered. Major dump on COVID here, but now above the 200. The 200 sitting at about 40 half or 41 or so. Let's see, right here. So it's 41.61. So that one right there, again, from a higher time frame perspective, being above the 200 here, the way it's done it is pretty good. It hit it here, pull back, through it, hold it here, continue higher, and now it's made some separation from the pivot high to where it is. That separation is really solid compared to what we've seen this entire time. So I think longer term, not bad. perhaps it may pull back toward 40 and then be a continuation toward 55. But I think the upper end of the range here for this one is 55 at some point here down the way. That 55 level right there was where we kind of broke down. It's where we rallied to and then broke down again. So it appears that that's still the range to watch. You have 55 on top, you got about 32 on bottom, and so far we're still working our way higher from that low, and I think 55 is still the level to reach. Again, you probably don't want price getting back below 40 in order to get there, but everything is still kind of looking okay for right now. Now in the very short term here, you know, today we have a sell candle that come into play. It hit after failing to hold above the previous month's midpoint. That can be an early sign of weakness. So maybe on a swing basis here we might see a little bit of a pullback toward the 200 based on this, unless price can close above that midpoint tomorrow or in a couple of days here. So right now I still think longer term picture here, this one has a good shot to reach 55s. I wanted to also talk about Hexo. We've been talking about long-term accumulation patterns here in the weekly time frame, and Chronos and how it's played out, and then TLRY, how that's playing out. Hexo looks very similar. You can see this great accumulation. This great accumulation that is developed right there. Really good breakout to begin the year. You can see again something that's very important to accumulation is being able to shift value down to it. And now once someone has accumulated down here that supply, it's pretty easy to start getting price to open up to the upside, and that's when you start to see your markup phase all the way up. So this one has had a really good accumulation over the last 8 or 9 months or so, has now broken through the top of that range. If it can hold, you know, above 550 or so, it has a shot to continue higher. I would say, I don't want to overdo it and say we're going up to 30 or something like that, but I think we have a good shot to get back to the bottom of the previous range where it broke down somewhere around 14 bucks. You know, you had a major breakdown that day, you had support here. So somewhere around 13, 14 bucks could be the next target up, which if you look at price right now, it's a double. I love a double. So again, this one has a great accumulation. If it can stay above 5 or 550, these highs right here, which is 5 1/4, if it can stay above 5 1/4 overall, it has a shot to get somewhere between 12 and 14 fairly expediently. I don't want to say too soon, but this market is reaching targets at a pace that is just tremendously unprecedented for some of these stocks. But this is a really good accumulation that looks like it is embarking on a markup phase. You know, there was a few here that just got out of hand here lately. Look at Plug. We had Plug as a buy candidate the last couple of months, and it just seems ridiculous how much it's gone up here. But we had it as a long candidate the last couple of months because it's been very strong, obviously. We had it here as a buy candidate, didn't do a whole lot just yet, but it was pacing higher. You can see higher value relationships month over month. You can see back here, it pulled back into the trigger zone and exploded to the upside. So we had it as a buy candidate again last month in the trigger zone here, and also in the pivot range. And look at that, from $32, $33, this thing explodes to the upside and reaches $75.50 on that high. So a buy the dip, higher value relationship, and this thing the next day was up nice, and then bang, 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 all the way up. I mean, you never know which one's going to do that at times, but this one certainly did. So the last couple of months we did have it as long candidate during the monthly outlook. This was tremendous the way that played out. We'll see if it can continue to hold at these highs and build some market structure. But wanted to talk about that one a little bit. Another one we had last month was BLDR. It didn't really explode too much. I mean, it got up there to the high and kind of failed. But now is this lower boundary right here may be coming into play this time around. Oh, the plug rally is legitimate and not a Robinhood short squeeze, right? I don't believe that it's a Robinhood short squeeze. I think some of these, like plug and some of these other ones, I believe them to be true, but I mean, again, I haven't seen that they have been a Robinhood squeeze like some of these others, but woof, those are wild. So right now, this one looks like a cycle low within a channeling stock behavior right now. It held and took out some lows here recently and was able to hold that. If it can get above that midpoint of last month's range, which is 40.5, it opens up new highs in the 44, 45, and perhaps a little bit higher. So this one has a cycle low right now that perhaps has a little bit more upside toward about 46.50. From the low of the quarter, we may be looking at a move like this into earnings coming up soon. Wild stock there. Now, for some of you in the trading room, you know that I've been talking about TAN for several months. I guess back since the first time I really saw this one is when it came up on our scan right back here in September. That was a really good pullback within a developing and maturing trend. You've now seen this trend really continue to play out. I had no clue that we were going to go from 50 to 125 in a matter of months, but why not? Everyone else is doing it. So this one's been tremendous. We had this in as a short-term buy candidate last couple of weeks here on the extreme reversal for a push higher. It hit new highs but then pulled back deeply. And then on support, we talked about it yesterday as a buy candidate. On support, you see right here a gap up today, up nearly 5%. What I mentioned in the trading room today is that this one can sometimes, build a little bit extra energy up, back, and then go. This one has more upside likely ahead. We've seen ETFs like this in the past that have been bid up month after month as institutions continue to push into this one each month. So this one has the potential to rally. Right now trading 115.89. It wouldn't surprise me if we get up toward 140 by the end of the quarter or something of that magnitude. So we're looking at more strength ahead for this one unless price fails to hold this market structure support, which is about 105s or so. So we're looking for more upside toward 140 as long as 105s continue to hold on a closing basis. That's TAN. Another one we talked about is Overstock. Overstock here may be due for a squeeze very soon. Today, we talked about it yesterday with this great buy signal. For those of you in the room or have taken some of the training, you know that a midpoint retest is a very, very important entry approach. This one came back to that entry this morning and bounced off the top of the pivot range. Yesterday, it bounced off the middle of the pivot range, and it's holding. If this one can continue to hold above that market structure, especially above 70, 70 is kind of the key level here. You probably don't want to get down that low if you're in a position, but at the same time, that's the market structure level to kind of where it would fail. This one has a shot to retrade highs back toward 95. So, even from where we currently are, it's about almost a 20 handle rally up to that level. But it's really through 95s where it opens it up back toward 125 to 130, the upper end of this range. So right now it's happily trading kind of in here. It was trading down here. Soon, if it can get through the zone, it opens up all of these upside levels here, which could be pretty significant. So right now, this this one I would categorize as a short-term swing idea. Right now, you want to see it do this, and if it does do that, it could turn into, kind of a more medium or longer term squeeze idea. The reason being is that we have a really good rounded bottom developed here. Again, another accumulation type of pattern. And then you see right here we have really good push higher out of the PIMAs, that alligator mouth open, where it looks like it's starting that next phase of a markup phase. So it has a really good shot again to reach highs, and then perhaps from there make a move up toward 130 over the coming months. So that's an idea there to consider. Another one that has been one of my faves for a very long time is Roku. We had this one as a buy candidate last week on the pullback here with those signals. This one too was a buy candidate for us last month. It's been a buy for a very long time. I was in at 30 a couple of times, but I did not get back in over here, unfortunately, but at least not in the actual shares. This one did really, really well since then, and continues to have just tremendous market structure. Continues to hold key market structure levels, and as long as this one holds 380 here, it has a shot to go up toward new highs, perhaps into 450, 460 fairly soon, which is crazy to say when you're trading 418. But yeah, it has a good shot to make that next move toward 500 ahead. So again, right now at a good pullback zone, and it has the juice right now, it looks like, to continue higher. As long as it can stay above 380, 375, 380, it has a shot for 475, 500 up ahead. Very solid market structure out of this one. We also talked here, let's take a look at Big C. Big C is another one here. Again, I mentioned this one the last couple of days in our room, but hadn't really seen this this stock before. But I do like the way the price action is looking here. Again, we talk about great market structure levels, and if price gets below market structure and gets trapped, you get participants that get trapped too short down here. You see the squeeze come out. It's able to pop back above that market structure low, and boom, you see that pop. We've now seen a pullback right into value and a buy signal develop on a rejection today. The intraday rejection, whether you look at it on a 4 or 5 minute chart or a 15 or 60 minute chart or a daily chart, the rejection looks significant. It looks real. So this looks like it has a shot to make another move higher on a swing basis. And from current levels, if you retrade to 95, I mean, it's a plus 15 easy to that target. But like some of these others, this one looks like it has more juice that can take you even higher, perhaps into 110, which is this top end of this range here. So we may be looking at a move as high as 110 up ahead if this thing can stay above 75 here and this CVPOC. So from a short-term perspective, say you're going to swing trade this one up, you want price to stay above this midpoint on a closing basis. So say tomorrow it flushes and we don't close below that mid, the idea is done, right? For now at least. But if it can stay above that zone, you're going to start to work higher off that level. So if it can stay above 76.50 on a closing basis, daily closing basis, we have a shot to make a move back toward 95s on a nice swing basis. I mean, 5 to 7 days, maybe as long as 2 weeks if it needs it. But this one looks pretty good to consider. Now, everything I talked about last month and this month is mostly from the long side. The one short candidate that I did provide last month was GPN. I hesitated providing this short candidate because the market is silly strong, but it worked out tremendously. It worked out tremendously. Again, the only short candidate I provided last month. And it's because this market has been too strong. Why short when everything's going up like crazy? But the reason I provided it is because it was such a good rejection or developing rejection at a major level. That was the pre-COVID highs, and it took it out. First trading day of the year, it fell back below those highs, and then you start to see this rejection develop right there. And that's when I mentioned if it's sealing off the 210s, then we may get a pullback that can take us to 190, maybe a little bit lower into that midpoint of the previous month's range. And we got that and then some. We hit the 200-day, and then we've bounced now ahead of earnings. But what a move. If you're going to fade, that's a good template for it, is finding a major market structure level where you're starting to see that rejection develop and then snap it back toward, the previous month's mid or previous quarter's mid. We're snapping it back toward the 200, and that is indeed what happened here. So a great short. Now I do have one more short for this month. We'll see. Again, this market has been so strong, you have to really be careful. This one has been a very strong stock. It just came out with earnings here. You can see this morning. It shot prices higher, but then it quickly rejected those highs and kind of pulled back. Again, this is just a silly strong stock right here. Just really, really strong. So, again, if you're going to fade this market, you got to do it in a way that's risk averse here. At least not overly. You don't want to be selling calls like some of these other GameStop folks and not be covered. That type of thing. But I would say right here, this type of reaction can lead to a quick swing pullback toward the previous month's low, which in this case, IDEX Labs, that's a big move. I mean, you're talking 500 to 450 type of move. So the fact that we rejected those highs, again, across intraday time frames, it's a strong reaction up here. If price can stay below 512 half on a closing basis, we have a good shot to fill the gap, and we have a shot to come back to the previous month's close and perhaps as low as the previous month's low. So we have a shot to get all the way back down to the 455s, I would say, in the worst, or I guess in the best case scenario for shorts. So again, if it can't close below this level and instead we close above it tomorrow, that would negate everything I just said, and we might just explode to the upside. So that midpoint becomes very, very important. Higher high rejection, we could be looking at, again, at least a snapback. If you reject the previous high, you snap back to either the previous close or previous mid. That would take you somewhere here, and then with a shot to go across that entire range. So last month rather, we had that GPN sell candidate, worked out tremendously. We'll see how IDXX does here. Again, this one, this market is just so bullish. You got to be careful selling, which is what I said last time, and that's still the case right now. All right, I think that pretty much does it with my list. It looks like I've gotten to all of the ideas here. Oh, no, there's one more here. Looks like Vinod's asking about one more. There you go. This is Wingstop. And if anyone has any others, I'll take a look as well. This one. Okay. Usually I have some sort of key range or some sort of market structure that jumps out. I don't have a key range marked on this one, and I'm trying to see which one makes sense right now. But none of them really do as much. Wow, this has been a tremendous mover as well, especially from the COVID lows below 50 and then back above, or back to 170. Decent rounded behavior here, breaking above those highs here. I don't have strong thoughts on this one right now, Vanud, to be honest. I think right now it has a good rounded bottom behavior, which is indicative of more strength to come. It has higher value relationship. It's still inside the PIMA trigger zone. And, you know, the line in the sand for me is kind of the 150 level right in here. Because after it broke above that level, you know, that's the zone that needs to hold, or perhaps the previous month's mid, which is 145. 145 half is the previous month's mid here. So that's kind of the zone here. If it can stay above that, I think we march higher toward these highs and see 170. I think if it can't stay above 145 half, then that might start to walk its way back down to break even on the year type of scenario. So rounded price action here, an uptrending PIMA trigger zone, higher value relationship, all of that still to me looks like it has more upside ahead toward the recent high of 170 as long as it can hold 145 half. All right. Oh, let's take a look at Mrna. Mrna right here, this is Mrna. This one's had tremendous rally. Obviously, all that vaccine stuff has helped tremendously. There's the explosive move. Boom, way up. After an explosive move, there can be, you know, the deep pullback because all of the volume in profile here was thinly traded on the way up. And in order to fatten up that profile, you got to trade up, you got to trade back, you got to trade up again. You know, and you can see it's actually built some market structure out here, staying above 100, which I think is very important. And right now we do have a buy signal on the pullback. This buy signal is a little different than I would normally like to see sometimes. You know, this is extremely bullish here, then a very rapid pullback, pretty deep. I think this has a good shot to stay between 140 and 190. And perhaps trade up here and maybe do this before it tries to continue higher. So 140 is kind of the level here. If it can stay above that level in this pullback, I think, you know, right now midpoint retest 153 to 180 to 190 could be ahead. If it can get through the 190s, you know, you start to open up the next market structure ahead. Again, it's almost video game-like stuff here, the way that these markets are just breaking through these price levels and seeing such massive range. So, you know, I've said before that I lacked imagination on how big and inflated these prices can get. And that's still the case here. It looks okay. It looks good. As long as it holds 140, I think we got a good shot for 190, and perhaps even start making a move for higher highs beyond that. So those are some thoughts on Mrna. Another one here is QRVO. All right, take care, Steve. So here's QRVO, Corvo. Really good extreme reversal right here. Good trending market. It's pulled back and bounced very nicely here. Earnings are coming up, so that's always something you have to be mindful of here. Looks like that is tomorrow after the market. So we will see again what happens there, but it looks like everything is still flowing to the upside. Higher value relationship month over month. It did close below it, but has been able to reclaim that pivot range midpoint. I mean, it looks like it has a continuation higher based on market structure and the way it's playing out here, we do have earnings which could throw a wrench into anything at any time. But 205 to 210 could be a good upside target up ahead here as it kind of, or at least up toward 200, right? So we're sitting at 180 right now. A move in the 200 could take us right into new highs here, and it may not even break a sweat trying to do that. So everything looks great there. I would say a key range may be a good way to go as well. So if you look at this sharp top there, it pulls back to this bottom and bounces back to the mid. That's your key range right there. So I would mark that key range and see where it takes us. 192 to 162. That's 30 handles there. We're looking at a 222 upside target down the road based on that key range. All right. Again, as always, thank you so much for joining me for the PivotBoss Monthly Market Outlook. Again, always appreciate every time you all join me. It's always a lot of fun from my perspective. Thank you all for participating and providing some ideas. I think we came away with a lot of candidates here to watch. It's an hour and 15 minutes of content here. It will be posted right away as soon as possible. Again, everyone, if you want to join the trading room here, please go to pivotboss.ecofin.com. You can learn more there. You can get 50% off your first month. If you don't know about my book, Secrets of a Pivot Boss, check it out. It is flying off the shelves, selling like hotcakes, and that is just incredible. So again, always grateful and appreciative for that. So thank you all for that. If you have any questions, please let me know. I can always be found in the trading room. And looking forward to seeing you all soon. Everyone have a fantastic rest of your day, and I will see you soon. Take care, folks.